Hey, I keep hearing about these China tariffs and how they crashed the stock market. Like, what even happened? Why did that make everything go nuts?
That's a great question. It's one of those things that sounds complicated, but really boils down to how countries buy and sell stuff from each other. Let's break it apart step by step. First off, tariffs are basically taxes that a country puts on goods coming in from somewhere else. Think of them like an extra fee at the border for imported toys, clothes, or gadgets.
Okay, taxes on imports, got it. But why would the US slap these on China specifically? I mean, isn't trade supposed to help everyone?
Exactly. Trade can be awesome when it's fair, like swapping snacks at lunch where both sides get something good. But the US felt like China wasn't playing fair. For years, they've said China was doing things like stealing ideas from American companies, forcing US businesses to share secrets to sell there, or even subsidizing their own factories with government money to make stuff super cheap. So, back in 2018, under President Trump, the US started adding tariffs to fight back. They hit about $300 billion worth of Chinese goods, with up to 25% extra tax. The goal? Push China to change those practices and level the playing field.
Whoa, $300 billion? That's like a ton of money. So was it about protecting American jobs or what?
Yep, protecting jobs and making sure U.S. companies could compete. Imagine you're selling homemade lemonade, but the kid next door gets free lemons from his parents and undercuts your price. Not cool, right? The tariffs were meant to make Chinese imports cost more, so American-made stuff, or stuff from other countries, looks better to buyers. It was part of a bigger trade war, with China firing back tariffs on U.S. soybeans and cars. Tensions built up, and suddenly everyone was watching how it would shake out the economy.
Trade war. That sounds intense, like a real battle but with money instead of swords. But tariffs seem like boring grown-up stuff. Why should I care about any of this? I'm just trying to figure out my allowance, not world trade.
Fair point. It's not as flashy as video games or TikTok trends, but here's why it hits home for you. Trade affects the prices of everything you use every day, from your phone to your sneakers. When tariffs mess with that flow, it can ripple out to jobs, what your parents pay at the store, and yeah, even the stock market, which is like a giant scoreboard for companies. If you're ever thinking about investing your birthday cash or just understanding why gas prices jump, this is the puzzle piece. It's not just adult drama, it's how the world economy touches your wallet.
Okay, that makes sense. Like, if trade gets wonky, my new game console might cost more? So the US put these tariffs on to fix unfair stuff, but it ended up crashing stocks. How does that connect?
It connects through fear and uncertainty. Companies that rely on cheap Chinese parts suddenly faced higher bills, which squeezed their plans. Investors who bet on those companies doing well got spooked and started selling shares fast. The market dropped because everyone worried the trade war would drag on and hurt growth. But before we dive into the stock panic, think about this. The U.S. importers are the ones writing the check for those tariffs right away. So who really ends up paying more in the end? China or folks like us buying the stuff?
Wait, not China? That's kind of surprising. Wait, not China? That's kind of surprising.
Yeah, it's a common mix-up. People think tariffs hit the exporting country right in the wallet, like China just pays up and that's that. But nope, here's how it really works. When a shipment of, say, phone cases or t-shirts arrives from China to a U.S. port, the American company importing them, maybe a big retailer like Walmart or a gadget maker, has to pay that 25% tariff fee to the U.S. government before the stuff even clears customs. It's like if you ordered a pizza from across town, but the delivery guy says, hey, add a $5 town tax, and you foot the bill at the door.
Oh, so the U.S. company pays it up front. Then what? Do they just eat the cost?
Not usually. They can't afford to just swallow it, especially if they're dealing with billions in goods. Instead, they pass most of that extra cost along to you and me, the shoppers. Think about your favorite sneakers. If the importer pays an extra 25% on the wholesale price, they bump up the retail tag to cover it. Studies after those 2018 tariffs showed prices for things like washing machines jumped about 12%, and electronics like TVs or headphones went up 10 to 20% on average. It's not always a straight 25% hike because companies might absorb a little or find cheaper suppliers elsewhere. But yeah, it trickles down to everyday stuff we grab at the store.
That stinks. So my new backpack or whatever could cost more because of this trade fight? I thought China was supposed to pay for being unfair.
Exactly, and that's the sneaky part of it. Politicians often say China pays the tariffs, but economists mostly agree it's U.S. businesses and consumers who feel the pinch. China might lose some sales if their stuff gets too pricey here, but they don't write the check. It's like if your school raised the price of cafeteria food to punish a bully from another class. The bully doesn't pay, but everyone eating lunch does. In the trade war, American families ended up spending an extra $40 billion or so a year on higher prices, according to some reports. That hits harder on basics like clothes, toys, and school supplies that a lot of us rely on.
Wow, $40 billion? That's like buying every kid in the US a new bike or something. But couldn't companies just switch to making stuff here or from somewhere else to dodge the tariffs?
They could, and some did. Factories popped up in places like Vietnam or Mexico to reroute supply chains. But switching isn't quick or cheap. It takes time to build new factories, train workers, and test quality. For a while, companies were stuck paying those tariffs on Chinese imports they couldn't replace overnight. Take Apple, for example. They make iPhones with parts from China, and those extra costs added up fast, pushing them to warn about possible price hikes on new models. Or Walmart, which sells tons of affordable clothes. They had to either raise prices or squeeze their suppliers. In either way, it meant less wiggle room in their budgets.
Makes sense. So all this extra cost from tariffs is why prices went up on my daily stuff. But if companies are dealing with higher bills for parts and materials, doesn't that mess with how they run their whole business?
Spot on, it does. Imagine running a lemonade stand where lemons suddenly cost 25% more. You'd either charge more for your drinks, make smaller batches, or find a way to cut corners elsewhere. Big companies face the same squeeze. Higher import costs eat into their profits, force them to rethink plans, and sometimes even lay off workers if sales slow down. That's where the real worry starts bubbling up for everyone watching the economy.
Profits getting hit sounds bad. Like, if a company makes less money, what happens next?
Well, lower profits mean the company might report weaker earnings, which is like getting a bad grade on a report card. Investors who own shares in that company start thinking, uh-oh, this isn't growing like I hoped, and they sell off to avoid losses. But with so many U.S. companies tangled in global trade, like car makers using Chinese steel or tech firms with overseas factories, the tariff news created a wave of fear. Suddenly, the whole market felt shaky, and stocks tumbled as people panic sold. So, companies facing these higher costs, why does that scare investors so much?
Yeah, why does that freak out investors? I mean, stocks seem like something only for old rich people with suits. How does a trade thing like tariffs shake the whole market?
It's funny you say that. Stocks aren't just for the fancy crowd anymore. Plenty of regular folks, even teams saving up from part-time jobs, dip into them through apps or family accounts. And yeah, trade hits everyone because the stock market is like this huge web connecting thousands of companies. When tariffs jack up cost, it doesn't just nick one business, it ripples out like a stone skipped across a pond, splashing waves to suppliers, stores, and even jobs in your town.
Okay, ripples. So higher costs cut into profits, right? Like if a company spends more on parts from China, they make less money overall.
Exactly. Profits are what's left after all the bills. Think of it as your allowance after chipping in for chores or snacks. With tariffs adding that 25% hit on $300 billion of goods, companies like Boeing or General Motors saw their costs climb fast. They import steel, electronics, or fabrics from China, so suddenly their margins, that's the profit slice, shrank. Analysts started slashing earnings forecasts, predicting companies would make 5 to 10% less than before. It's like if your favorite burger joint says burgers now cost more to make, so they warn profits will dip, and suddenly the whole vibe changes.
Earnings forecasts, so people who predict money stuff started saying it'll be worse?
Yep, and investors hate surprises like that. They buy shares expecting steady growth, like planting a seed and watching it sprout. But when forecasts drop, it's like the soil turns sour overnight. In 2018, right after the big tariff rounds, companies freaked and issued warnings. Apple said iPhone costs would rise. Caterpillar, they make heavy machines, cut their outlook by millions. Investors panicked, thinking if profits tank, share prices will too. So they sold shares in a rush, flooding the market and driving prices down. The S&P 500, which tracks the top 500 U.S. companies, plunged about 5% in just a few days during peak trade war scares. It wasn't one stock, it was a herd stampede.
A stampede? That sounds chaotic. Like everyone running at once because they're scared of the same shadow.
Spot on. Fear spreads fast in the market. Imagine a school rumor that the big game might get canceled. Suddenly, kids are buzzing and changing plans. Here, the rumor was endless trade fights hurting growth. Tech stocks like those in the NASDAQ dropped 6 to 8% in spots, and even safe bets like utilities wobbled. Why? Because trade touches everything. Your phone's chips, cars' tires, even the food packaging at the grocery store. When companies freak, they might delay hires or expansions, slowing the economy. Investors see that chain reaction and bolt, causing the crash. But it's not all doom. Markets bounce back once clarity hits, like after trade deals ease tensions later.
Whoa, so even if I'm not buying stocks yet, this affects the whole economy? Like, if companies cut jobs because of lower profits, that could mean less money for everyone.
You got it. It's interconnected. Trade wars aren't isolated. During the height of it, some factories paused orders from China, leading to layoffs in U.S. ports or warehouses. Investors weren't just worried about one company. They feared a slowdown that hits retirement funds, college savings, and even the prices of stuff you want. That's why the drop felt like a crash, not because tariffs bankrupted anyone overnight, but because uncertainty made everyone hit the sell button at once. Picture a game of musical chairs where the music stops abruptly. Pure frenzy.
Frenzy makes sense now, but stocks dropping 5%, is that a big deal? Like, does it recover or is it gone forever?
It's a big deal short term. $2 trillion in market value vanished in days, which spooks people and can slow spending. But markets are resilient. They climbed back as talks progressed and companies adapted. The key lesson? Investor panic amplifies these shocks, turning a tariff tweak into a market quake. Still, watching it all unfold shows how global events pull the strings on what seems like just business.
Okay, but how can I make sense of market chaos like this?
Great way to wrap our heads around it. Treating the stock market like a game can make it less scary and more like something you can play. Remember how in a video game you watch for patterns, like enemy moves or power-ups? The market's similar. It's not total randomness, even if it feels that way during a tariff frenzy. You start by tracking big news, like trade talks or new taxes on imports, because they act like game alerts that shift the board.
Like alerts? So if I hear about another trade spat, I know to expect some wild swings?
Exactly. Back in the China tariff days, headlines about Phase 1 deals or escalations were like flashing warnings. Investors would react by buying or dumping shares based on whether it sounded good or bad. To follow it simply, grab a free app like Yahoo Finance or even Google News alerts for trade war or tariffs. Set it to ping you on updates, and you'll see how a single tweet from a leader could spike or tank prices overnight. It's like scouting the map in Fortnite. Knowing the terrain helps you dodge the storm.
Apps sound easy enough, but what about the companies themselves? How do I figure out if tariffs will hit them hard?
That's where peeking at supply chains comes in. It's like checking a character's backstory to see their weaknesses. Most big companies list where they get parts in their annual reports, which you can find online for free. For example, during the tariffs, Nike talked about shifting shoe production from China to Vietnam because their supply chain was heavy on cheap Asian factories. If a company's tangled up in China for batteries or fabrics, they're more vulnerable to cost hikes, like a player with low health in a boss fight. Watch earnings calls, short videos where bosses explain plans, and listen for words like tariff impact or reshoring. It shows if they're adapting or hurting.
Reshoring? You mean bringing stuff back to the US?
Yep, moving factories home or nearby to skip border taxes. Some did it post-tariffs, like Hasbro Toys starting more US assembly. To make it game-like, think of companies as teams. Strong ones diversify suppliers, like spreading your Pokemon cards across types instead of all fire. Weak ones rely on one spot, so trade hits knock them out. Track a few favorites. Say, if you like Tesla, note their battery sources, and see how news affects their score, the stock price.
Diversify. Okay, spreading out to avoid big losses. So investor reactions are like the crowd cheering or booing.
Spot on. The crowd's mood swings the game big time. Basics of reactions. Fear makes folks sell fast, creating drops like the 5% S&P slide we talked about, while hope from a deal news pumps prices up. It's herd behavior. Everyone follows a leader, like kids piling on a trend at school. Learn it by watching indexes. The Dow for old school companies, NASDAQ for tech. During chaos, if trade news sours, expect the herd to run. If it sweetens, they charge back. A simple trick? Follow one metric, like the VIX. It's the fear gauge that spikes when panic hits, telling you if it's stampede time or chill.
Fear gauge? That's cool, like a health bar for the whole market.
It is. Jumps over 30 means high stress. Under 15 is calm. Tie it to real life. In 2019, as tariffs eased with a partial deal, the VIX dropped, and stocks rallied 20% that year. Investors react to uncertainty like players to a glitchy update. Some quit, others grind through. For you, starting small, paper trade on apps. Pretend buy shares and see how trade news moves them. It builds that gut feel without risking your savings.
Paper trade? Fake money practice? I could try that with stuff like Apple since they got hit by tariffs.
Smart pick. Apple's a prime example. Their supply chain's global, so tariff talks always stirred reactions. Shares dipped on escalation fears, bounced on deal hopes. By monitoring like this, chaos turns into patterns you can predict a bit. It's empowering, right? No need to be a pro, just consistent checking turns the market from a scary monster into a game you level up in.
Yeah, patterns over panic. I get it now. Track news, check chains, watch the crowd's vibe. Makes watching stocks feel less like gambling and more like strategy.
You've nailed it. Seeing those connections means you're already ahead, ready to spot the next twist without getting swept up.